So it was the index gaining further gains in today's trade and inching to a new life high again. Good evening, traders. We are on the 11th of October 2021. This is 5:20 p.m. Indian Standard Time. Yes, relatively earlier than my usual videos, but with the markets all's well. Nifty gains 75 points at the close, a little less than 0.5%. An intraday high of 18,059 and a close of 17,975. Yes, a little bit of slippage from its intraday highs, but all in all, what worried us a little bit last week, a bit of volatility that we saw especially on Wednesday's long red candle fall. The index over the next 3 days, Thursday, Friday, and Monday today, has managed a decent, steady bounce back to sustain above this high. A quick volume profile clearly shows that 17,850 kind of level is the short-term immediate support for the index. That's close to today's low. And on the upsides, it's open up. We also were contemplating that is this a left shoulder, a head, and a probabilistic right shoulder? Well, that possibility is out of the picture now. So this is no longer a neckline. This is no longer a pattern. And the index is doing exceptionally well to gain further upsides, and so be it. Let's take a look at the 75-minute time frame, and we can see that over the later half of today's session there was a little bit of selling coming in, but that's okay. I think the way it opened and it followed through for the first 2-3 hours, after that a little bit of correction is no big deal. Short-term levels, as you can clearly see, there's a cluster of volume profile and previous swing highs. If you recall, we were talking about this zone earlier last week, wherein this was a resistance. The resistance was faced once and a bit of congestion over here twice, but this time it has taken out. So going forward, tomorrow, day after tomorrow, if at all the index comes down, then this 17,900 all the way down till 17,850 should work as the short-term support for the index. There's no particular reason to go negative. There's no technical rationale right now in any of the time frames to go contrarian negative on the index. So stay with the trend and try to do primarily long trades. The Bank Nifty also supported fairly well. We can see a little bit of slippage coming in the last hours of Bank Nifty's trade as well. Bank Nifty's got a pretty wide range. This is the wide range where we can see very clearly erstwhile highs were made. The index has taken that range out and just slipped inside. In this bounce back, the recent 3-day bounce back that we've seen, a cluster of pretty decent volumes have happened in this zone. So similar to the Nifty, if the Bank Nifty comes down, if we see the Bank Nifty inching down, then I think the psychological 38,000 mark should work well for the index. The daily, weekly charts of the index are well poised, and we should be expecting further upsides from the index. Let's quickly take a look at the stocks which makes up the Bank Nifty. And in today's trade, Bandhan Bank was the one which was hurt the most, but that's okay. We can see over the last 6 sessions the kind of rally that the stock gave us. Amongst the biggies, it was ICICI Bank, which was doing really good. It's bounced back really well. Triple topish kind of a behavior over here, and then the breakdown, and now the pullback, the bounce back inside the range. It's going to be really important. The good thing is high volumes and high ranged bar for the ICICI Bank today. So very likely it's going to stay within this range. Kotak Bank also did fairly well. We can see how it slipped, and this is the reason why Bank Nifty and the Nifty both actually slipped from its intraday highs today. HDFC Bank did relatively better, and State Bank of India, a beautiful move, kind of a breakout on the upside. So banks have started to participate, which is always a great thing. Amongst the indices, the public sector enterprises leading, up 3%. Auto up almost 3%. Tata Motors, seems like the stock is more into flying than making airplanes than cars, because the way it's flying over the last few days, if you can see it, take a look, it's literally flying off the charts. So in fact, we should take a look at the top stocks which make up the Nifty 50. 9% gain from Tata Motors, 419. This is particularly the the kind of strength trends show and at times they deliver. This gets really difficult because these kind of moves are out of the normal distribution. These are the big strong trends wherein big money can be made or big money can be lost also. Nevertheless, Maruti is the other stock which gained. So four wheelers, auto pack doing well. Your old friend ITC bounced back, it's doing well. We spoke about SBI, HDFC Bank, ICICI Bank. Sun Pharma amongst the pharmaceuticals is also holding really well. Now, this is a beautiful classic technical analysis. Breakout, pullback, retest, resistance, supports, now a bounce back. So we're all heading for further upsides on Sun Pharma, sure. Bharti Airtel will be a very, very interesting stock to look for. I'm keeping a very close eye on this stock above the 700 mark. Hindustan Unilever too has created a bullish harami pattern on the daily chart, has extended on the downside quite a bit than you would have expected. From its recent highs, if I draw an info line, it should give me a crack of around 8%. That's quite a bit from the highs, and from these clusters, it's around 6.8. So 7% correction, 7 to 8% correction from the stock is quite a bit, and it's made a bullish harami pattern in today's trade. So Hindustan Unilever, Bharti Airtel will be really interesting stock to watch at. It was the large cap IT, TCS, gap down 6% today. Infosys also weak but managed a bounce back, and so did stocks like HCL Tech and Tech Mahindra. So it was IT at the beginning which was dragging the index down, but towards the end did fairly okay. One important thing is, thanks to today's move, you can see that most of the IT stocks, this is a 9-period average true range. It's shooting outside the 2 standard deviation for HCL Tech. It's shooting outside the 2 standard deviation for Infosys, and definitely it will do so almost towards the 2 standard deviation for TCS. What this means is the IT pack, we know we're in a strong uptrend. We know have proven really well, but recently it has now, and I think over the next few weeks it will stay volatile. So be very careful if you're a short-term trader and if you're eyeing the IT stocks. If you're a medium to long-term investor, you can utilize a further drag in the prices, if at all, if it comes, to accumulate some more, because the long-term trends of these stocks and this sector is exceptionally strong. Let's sum it up quickly. We have a new life high. We have the index holding really well. We saw the index, how it coped with the recent volatility we saw last week. And there's no particular reason on the charts right now. We might start to again see some divergences. With the short-term momentum, not much. There are intermediate divergences. We should not conclude on the divergences right now, but stay with the trend. We are getting some good breakouts, high momentum breakouts, and I think we should continue that unless we get some serious signals or movement on the downside to turn bearish. All right, till then, everyone, trade well.